everybody, here's Yulia Hazanov and I'm a realtor here in Northern California, and today I'm with the fabulous Todd Galde, and he's a lender with Cross Country Mortgage, and we are doing a first-time home buyers workshop. So all the renters out there and all the people that have been thinking about buying and finally get a pre-approval, but for some reason been holding off and somebody been telling them something else. So now is definitely the best time to buy and to get your pre-approval. And Ted is here, gonna take it from here and bring us all the explanation.
Julia, thank you so much. I'm honored to be here and to be presenting a workshop that I call Home Financing Workshop. And normally this workshop spans seasoned buyers as well as new buyers. We're going to focus on first-time home buyers. And so there's a lot of details, very confusing things that we're going to leave out for now. And we're going to talk about the most important things, which I call the ABCs of home financing. And we'll talk about what that acronym stands for here in just a little bit. I want to talk initially about some of the emotions that go into buying a home, right? And thinking about buying a home. And a lot of people, when I give presentations personally, before COVID of course, but hopefully soon, to crowds, you can see some of the anxiety, right, on their faces, and some of them are sweating and they're kind of nervous, right, about buying a home. And it's a big deal. I get that. Not as big as maybe having a baby or getting married, but it's close, right? And so my goal, I think Julie and I's goal right now is to kind of help those fears subside, right? And help you to take a nice deep breath and to recognize that while there may be some complicated aspects about buying a home, it's not as tricky or as difficult as people make it sound. So that's our ultimate goal, is just to give you some peace of mind, right? With regards to buying a home. Now, a couple things that I like to talk about up front, which is there's three components to this presentation for the most part. One is preparing to purchase a home, and that's what I call the ABC. So that's going to be most of our presentation today is going to be about those ABCs. And then we're going to talk a little bit about the negotiating process, right? So once you're actually approved and qualified, what does it take to actually submit an offer, right? And to get your offer accepted, right? So we're going to talk a little bit about that towards the end. But to start, I like to start from the very beginning and to recognize that at some point in the home buying process, you have a thought, right? It might be at a cocktail party, it might be at the water cooler at work, but at some point someone says, you know, my uncle's buying a house, or my mother and father.
Or you're stepping into some beautiful home and all of a sudden you're like, I want a house just like that. What would it take me to get one?
Yes,
right?
Exactly. Exactly. So those are some of the positive reactions. Some of the negative ones are, we're paying too much in rent. Our landlord just kicked up the rent again. The landlord took a week to come fix, the plumbing.
Or
right?
he decided to move in and now we have a place to live. We need to vacate like in a month.
Yeah.
What to do now?
Exactly. So those are some of the things that trigger the need or the desire to purchase, the motivators, if we will, right? Now, we also recognize that buying a home is a good investment, right? So as from a broader perspective, being able to get into the market, right, allows you to hopefully build equity, right, and appreciation over the years. There's tax benefits in buying a home. We talked a little bit about renting and the fact that the rent could go up, right, over time. That's not a fixed payment. When you have a mortgage, right, you own a home, you've got a fixed payment. You know what it is, right? So for years, you know exactly what that number is, and you don't have to worry about it going up, right? And then of course control, right? We like control, and if we're renting, sometimes we don't have control, right? And when you own a home, you have control.
You can paint the walls, right?
Yeah.
Whatever color you want,
Exactly.
and just do whatever you want with your yard, right?
Yep, exactly. But I think the most important factor in buying a home is that there's a pride, there's a huge sense of pride. And especially, I know you're from overseas, there's many of my clients come from many different areas of the world, and to a T, almost every one of them talks about the pride of ownership of,
Yeah, it's like the American dream.
It is the American dream. Exactly. So you may feel that way, and we certainly honor that, okay? So there's three things that we're going to be talking about today, what I call the ABCs. And these three things comprise These three things comprise almost 90% of your qualifying or approval process, okay? So the first one is what we call assets, okay? Second one is budget, okay, or income. And the third one is credit, okay? Once these three things are determined for you as a home buyer, you're pretty much set. Now, so what are some of the unknowns? Type of property, right? Is it a condo versus a single family home? Location of property, right? We don't know those things yet. But for the most part, we can determine assets, budget, and credit for you as a home buyer. And once you've determined these things, the level of confidence in buying goes up dramatically, okay? All right, so we're gonna start with assets. Okay. And I wanna make the comment, there's three buckets, okay, that determine your ability to buy when it comes to the money, okay? The first one, the first one is what we call the down payment, right? Everybody thinks of that one first, right? And generally speaking, speaking, a lot of people think you have to put 20% down on a home. In fact, there was a study done not too long ago that said, I don't remember the exact percentage, but it was like 70% of new home buyers think they have to put 20% down. You do not have to put 20% down. In fact, most buyers these days put less than 20% down. And we'll talk a little bit about that, okay? So down payment is one bucket, okay? The second bucket is what we call closing costs, okay? And I always talk about closing costs because they always exist, okay? We obviously get a lot of people who talk about no closing costs, right? And I heard this ad on the radio talking about no closing costs, right? There's always closing costs. There's hundreds of people in every transaction that have to be paid, from appraisers to title to escrow, the credit report. All of these people are providing services, right, for you as a home buyer to be able to close on that transaction. They have to be paid somehow, some way, right? So there's always closing costs. Now, are there ways to cover those closing costs? Yes, right? And that's why you hear the radio ads and internet ads that are talking about no closing costs. It's just to get you to call, right? But there are closing costs. That's important to know. The third one is what we call reserves. Now, you don't always have to have reserves, okay? You always have to factor down payment and closing costs. Reserves, what are reserves? Reserves are, if you put 20% down on the purchase or 10% down, whatever that number is, and you've got closing costs, reserves are an account that you have after closing, like a savings account, a 401k, right, that have a certain number of months of payments, like 12 months or 18 months of payments in the bank, okay? Now, most transactions don't require reserves. If your loan amount is higher than a certain threshold, what we call jumbo, then you do require reserves. So it's really important when you're talking to your loan officer to find out what kind of loan you have. If you have a jumbo loan, for the most part, you're going to need reserves. And so it's very important to talk about that, okay? All right, so those are the three buckets that we are looking for when it comes to qualifying you as a home buyer. Now, how much is required? Now, this next question could be its own 30-minute conversation all by itself, right? So how much? Right? Okay, now Julia was telling me about a client that you had that was looking in Contra Costa County, Walnut Creek, Concord, Pittsburgh, Antioch, right?
Everywhere.
Yep. And then what happened?
And so we've been looking at all these areas, and then they decided, they want like a bigger yard, whatever, they want to bang for their buck, right? Mm-hmm. So they started looking in Solano County. So we went to like Fairfield, Vacaville, those areas, and then we realized, it's not going to be the same pre-approval that they've got in Contra Costa for Solano County, because it's going to be a different rate. It's two different counties.
Exactly. So what ends up
what's happening?
Yeah. So what ends up happening? So this is incredibly important. If you take nothing away, then the next 3 minutes of this presentation, hear this, okay? Walnut Creek, Concord, those cities are in Contra Costa County. Oh, and by the way, your client was putting 5% down, right? So that's very important. They were putting 5% down. And in Contra Costa County, you can have a loan amount as high as $822,000. Okay, so Cocoa County, 822K. Okay, now they had around $50,000, which was the equivalent of 5% down, and some change, and so they were approved for a purchase price around $850. Okay, 5% down meant the loan amount was less than $822, but when they went over the Benicia Bridge into Solano County, the maximum for 5% down in Solano County, so if I say Solano, right, is 548. Okay? Now, so here Julia's spending time with them looking at $850,000 homes with 5% down. The beautiful homes in the 800,000 range in
Contra Costa, and we looked at like all those areas like Concord and
exactly. And then when you went over the Benicia Bridge into
Solano County,
Vallejo, right?
Vallejo and Fairfield.
Okay, in their mind they were thinking, okay, they're still looking in the 800,000 range, getting all excited because now there's actually homes that they really like.
Yeah.
But guess what? They can't put 5% down because the max is 548,000, and so their qualification was no good.
It changes, It's not going to be the same type of homes that they've seen in Solano County and Contra Costa.
Exactly. So, very important. Pay attention to the county that you are looking in, and make sure you ask your loan officer: is there any reason I shouldn't be looking in San Joaquin County, for example, versus Alameda? Okay, there's a whole bunch of the counties will go up and down with regards to loan amounts. Okay. All
and
right,
always make sure that you keep your realtor and the loan officer informed. If you decide you want to go to a different county, just let them know so they can maybe try to get another pre-approval for like a different area.
Exactly. That is huge. That being in touch with your agent and keeping them informed in the process is imperative.
Yeah.
Okay. Now, one more topic before we move on to budget is where can money come from? Okay. So, a lot of people have cash, right? Most people have checking and savings and 401k. We know we can kind of borrow from those accounts. Those are all legal. Those are legitimate. Gift from family members, right? So you can have an in-law or a grandparent or a parent gift funds for the purchase. Those are all acceptable, okay? Now, I got I had a transaction 3 years ago, and the gentleman said his grandfather was going to be gifting him the down payment, about $50,000 worth, okay? I said, great, no worries. The grandfather actually showed us the bank statements, right, that we were going to use, so we felt very comfortable going in. About 2 weeks into the transaction, I got a text message with a photo, and on the photo was a pile of gold coins, right? And he said, hey, I'm running over to my grandfather's house to pick up the down payment. It's in the form of gold coins, right? His grandfather for years and years and years collected gold coins, and so he was going to turn them all in, right? And I freaked out. I said, wait a minute, because you can't use gold coins unless you can prove that grandfather was the buyer, right? The original buyer of those gold coins, okay? And so he was, right? So he had receipts for everything. So that worked out okay. My point is, the funds have to be sourced, okay? So it doesn't matter where, they have to be sourced, okay? Now, what does that mean? We have to know that the funds that are coming into escrow are legal and that they're tied to you in some way, okay? So, for example, this happens all the time. A friend or coworker, someone will transfer money into their account thinking they can then deposit it and it would be acceptable. We have to know where that money came from if it's within 2 months, okay? So it's very important to pay attention to where the money is coming from, right? And if you are getting funds, for example, from overseas, you should season those funds in a bank account for at least 2 months. So it looks like it's your money, okay? All right, so and the funds can come from overseas. That's There's no issue with that. But the key is we have to know where it's coming from. Okay.